In the world of public finance, transparency is not just a buzzword. It is the foundation of trust between a government and its people. For years, Pakistan's public sector accounting ran under a complex web of rules that obscured a complete financial picture. International Public Sector Accounting Standard 34, Separate Financial Statements, changes that. It is a shift toward clarity and accountability. Think of upgrading from a blurry TV to high definition. Suddenly, everything is clearer, more detailed, and easier to understand for policymakers and the general public. Ipsas 34's goal: a comprehensive, transparent view by consolidating all entities the government controls. At the heart of Ipsas 34 lies a powerful concept: control. To apply the standard, we must define it precisely. Control is the power to direct another entity's policies to obtain benefits from its activities. Both elements together establish control. Power is the existing right to direct relevant activities, often via board appointments, as with the ability to appoint PIA's board. Rights can stem from laws, regulations, or agreements over major decisions and budgets. Benefits are variable and not always financial. A controlled utility benefits government by delivering essential services. State enterprises may yield dividends, jobs, or strategic supply outcomes. Ownership alone is insufficient. 40% with special rights can control. 60% with another's veto might not. In Pakistan, examine entities like WAPDA or NHA. Does government have power and exposure to benefits? First, define the reporting entity. It could be the federal government, a provincial government like Punjab, or a major city district. This parent consolidates all entities it controls. Establish scope early. Create a comprehensive list of potential controlled entities. Include companies, statutory bodies, autonomous and semi-autonomous entities, authorities, and joint ventures or trusts. For provinces, a bank, development authorities like LDA, and public utilities. Don't rely on memory, review acts, ordinances, contracts, and share agreements. Be broad. Include majority, minority, or significant influence via rights. Co-ownership may exist. Analyze who truly has control. A complete list is foundational. Missing entities undermines Ipsas 34. Assess control with 3 pillars: power, benefits, and the link between them. Power: existing rights to direct activities that most affect outcomes. Benefits: exposure to variable outcomes. Dividends for PSO vary with profitability. For hospitals, benefits are service performance for citizens. The link: ability to use power to affect benefits. Example: government appoints SBP's board, directs policy, influencing economic stability. Ask: do we have power? Are we exposed to variable benefits? Can we use power to affect them? If all yes, consolidate. If any no, account as an associate or investment, not a subsidiary. Once controlled entities are identified, consolidation combines the parent and subsidiaries to present a single economic entity. Add line by line, assets, liabilities, equity, income, and expenses for a bird's-eye view. Gather audited statements of controlled entities. Align accounting policies. Adjust where parent uses cost and an authority uses revaluation. Eliminate intra-group balances. A federal loan receivable versus WAPDA's payable cancels. Money between pockets. Not a transaction with the outside world. Prepare the Consolidated Statement of Financial Position, the Consolidated Statement of Financial Performance, the Consolidated Cash Flow Statement, and notes. If ownership is under 100%, present non-controlling interests to reflect all claims. Consider the Government of Sindh as reporting entity and a provincial food authority. Law enables DG appointment, board composition and budget approval, rights to direct relevant activities. They can set standards, conduct inspections and impose penalties. Power established. Benefits are non-financial, safer food and better health for citizens. Outcomes vary. Strong performance improves health. Weak performance risks outbreaks. Through appointments and budgeting, Sindh can use its power to affect benefits. All 3 pillars are present. Conclusion: Sindh controls the food authority. It must be consolidated into Sindh's financial statements. The journey includes legal, administrative, and practical hurdles. Entities created under varied laws with autonomy can blur control definitions, creating ambiguities. Data may be delayed, inconsistent, or cache-based. IPSAS needs timely, accrual-based information. Collecting, standardizing, and auditing hundreds of entities is monumental, requires capacity building, training, and technology investments. There's a shortage of IPSAS skilled staff. Upskilling is critical. Autonomous bodies may resist perceived loss of independence. Clarify that consolidation is about transparency, not control of daily operations. Strong political will and clear communication help secure cooperation. Ipsas 34 dramatically improves transparency and accountability with a single comprehensive report. It shows the full picture: assets, liabilities, revenues, and expenses, including SOEs and authorities. Hidden liabilities surface on the main balance sheet, improving risk insight, enables prudent debt management, accurate forecasts, and smarter subsidy, privatization, and investment choices. Global standards build credibility, better ratings, lower borrowing costs, stronger FDI. Ultimately, citizens benefit through better services and fiscal sustainability. It safeguards the economic future for generations. Adopting Ipsas 34 is transformative, moving from fragmented reporting to a unified, transparent framework. By embracing control and consolidation, we commit to accountability. Understand power, benefits the link, map entities, master consolidation. Yes, challenges persist. Legal complexity, capacity gaps, and data upgrades. Treat them as opportunities to modernize and build resilient institutions. Success needs strong leadership, clear communication, and a phased plan with all stakeholders. Form Ipsas teams, invest in training, map potential entities, assess relationships, run a pilot with provinces or a major ministry, collaborate with the Auditor General and finance departments. IPSAS 34 is a catalyst, more transparent, credible, and effective government. Embrace this change to build trust and prosperity. The time for this reform is now.